Welcome back. You're still watching Business Morning on Channels Television, where reports have it that a number of banks now require as long as 6 weeks to process Form A requests. And many banks had in March significantly dropped spending limits on their Naira cards to as low as $20 monthly. It was previously $100. Well, this is just one scenario when it comes to the issue of FX. In Nigeria, we've heard repatriation of funds in the aviation sector has been halted, and we have a lot of money hanging there. Well, these are some of the realities that we have when it comes to FX management in Nigeria. Well, we have joining us to discuss this, Tosin Shukoya is the Chief Executive Officer of Commercial Partners Asset Management. He joins us from Lagos to share his thoughts and help us understand some of these dynamics of this. Good morning, Tosin. Thank you so much for joining us.
Good morning. Thank you for having me.
Yeah, so you guys are into research and you have your ears close to the ground. Tell us some of the realities when it comes to FX management and the shortage of supply in Nigeria.
Thank you very much. I think the challenge we have is the demand and supply imbalance, and it's a structural problem. Until we begin to deal with this problem might continue. I am aware that, and I think you are also aware because it's out there on the streets, that the divergence between the parallel market and the CBN official rate is widening. This is, I think, is a monster that we've created. The system has created, and it has entrenched itself in the FX market. And unfortunately, the system is feeding this monster, and this monster is going to continue to grow in size. And what do I mean by that? Let's put it in context. So at the beginning of 2020, shortly before COVID, the FX official rate, in fact, the parallel market was trailing behind the official rate at 360, 361. What has happened over the years is the fact that that margin, the FX parallel rate, has taken over from the official rate. By 2021, you see a disparity of about 80 naira. By the end of 2020, going into the early months of this year, it is widening by almost 40% of the official rate. Right now, as of today, the official, the parallel market is trading around 620, 623. What has happened is it has increased. It has expanded away from the official rate by almost 50%. What has happened is we begin to see a lot more demand moving into the into the parallel market. And until that is being addressed, the arbitrage opportunity, which is the monster that the system has created, will continue to grow in size. And that would continue to put pressure on the currency. My view is that, and this is the view of commercial partners, is that we need to begin to look for measures of how to converge the rates between the official and the parallel market. Earlier this year, the central bank came out with, I think it's a commendable initiative, the RT200, that is raised to $200 billion export revenue. I think that it's a laudable initiative. It's a lofty idea, but the challenge with that is the execution. So they've identified 5 key anchors, all right, ranging from value-adding export facilities to the biannual, non-oil summit. Those initiatives and the anchor, it's not just going to be driven by the central bank, because what would happen is what we've experienced over the years has been a demand management strategy, and it hasn't worked. The demand management strategy to a layman means that you begin to ration your supply of FX into the market. Whereas you're not looking at the supply side. The supply side is very essential to the balance, because I started off by saying that the challenge we're having in the FX market is the demand and supply imbalance. So if you focus only on the demand side and you don't look at how to strengthen the supply side, you will still have the imbalance. So the initiative to strengthen our export revenue and move it away from, what we earn today from the crude oil is very important, but it is not going to happen overnight. So it is a strategy that we expect will be effective and we'll see the results in the next 3 to 5 years.
All right.
But execution, like I said, is very important. So what that means is that all stakeholders must come to the table.
Okay, we'll get to the stakeholders in just a moment, but let's try to understand the problem. You did point out that from your perspective, it's a demand-supply thing, and you also talked about the disparity between the rates in the official window and the unofficial window, the parallel window. But the CBN governor has often alleged to round-tripping as a factor in the shortage of FX. Have you seen that?
We've seen that many years. Right? So it's like it's an industry that is thriving, unfortunately. And like I said, the system has created this monster, and we need to address it. So I don't see a situation unless CBN decides to take a radical action to converge the official and the parallel market. You would still see people rent-seeking to arbitraging the difference between the official and the parallel market. I mean, we're talking about almost, 200 naira? It's an incentive. So until you look at how to discourage that incentive, people will continue to perpetuate that, unfortunately.
So what does it take, to have one window? Some economists have talked about this, that we should have one window. What are the pros and cons of having one window?
I mean, the first con of having one window is that it will hurt us. It will hurt us at the short term, in the short term. And why do I say that? So if you converge it, and I'm guessing that you converge it in the middle of maybe between 420 and 620, so you converge it maybe at 550 or 580. What that means is that immediately we begin to have imported inflation. So there's going to be inflationary pressure. And what that means is that you would expect the prices of goods and services, because we are largely import-dependent country, the goods and services prices will continue to soar. When that happens, we will suffer in the short to the medium term. But in the long term, it's important for all the stakeholders to begin to look at how to encourage export revenues. For instance, today, the crude oil price or crude oil and gas sector, they contribute 10% to the GDP, but they contribute largely to our export revenue, and it shouldn't be. That is a structural dysfunction. We should begin to look at all the non-oil export, commodities that would, enhance the pool of export revenue. So what do I mean? The RT200, if properly executed, will begin to enhance our export revenue. Then if you look at the supply channel as well, it's important for foreign investors coming into this country to have confidence in the liquidity of this country. So the confidence has been completely eroded. That's why you would not see any investor coming into this country. Then you talk about the security and other challenges that we have. All those other challenges must be addressed by the fiscal authorities. So you don't leave everything only to the monetary authorities. So all the stakeholders, when I said all the stakeholders, it's important that everybody comes to the table and address the problem at heart. When that is done, like I said, at the short to the medium term, it's going to be hurting. But the medium to the long term, we will begin to benefit from it. Look at the main nations, for instance, where Nigeria is and Mexico. Nigeria only, our exports revenue is just about 70 billion. The Mexico in the mid nations has about 500 billion. The 500 billion export revenue is likely contributed by the manufacturing of that country, the manufacturing sector of that country. So we need to do a lot to our manufacturing sector. We talk about a lot of agricultural products, but those products, we are not utilizing the potentials of agricultural sector in this country. So a lot has to be done with the non-oil commodities, starting from not just exporting the raw materials, but the value-adding composition must be addressed as well. You can imagine from 70 to 500, that's a huge disparity.
All right, so you keep saying the stakeholders. I do understand from what you've said, of course, the manufacturers will be one of those. But let's go back to the RT200, which you have mentioned earlier. And you said, from your perspective, it's a good idea, but it's the implementation and all stakeholders must be involved. Could you paint a picture of a perfect implementation of the RT200 that you think could at least boost the supply of FX?
If you look at the 5 key anchors, okay, so you talk about the export facility for value addition. You talk about the FX rebate. You also talk about the expansion facility for non-oil. For each one of these anchors, it's important that, for instance, not only the banking community helping with payment and helping with FX, rebate payment, but the fiscal authorities as well, they need to come to the table. So if, for instance, you are a cocoa producer, and we're talking about, and I think when the central bank governor earlier this year was talking about the RT200 program, and he cited an example that Cote d'Ivoire and Ghana contributed more than Nigeria to the entire 150 billion, industry in cocoa producing and cocoa chocolate manufacturing. You begin to ask yourself that for cocoa producers in this country, what facility are you giving them to incentivize them to produce a lot more and to scale their business? What kind of infrastructure do you have in place with regards to transportation and logistics to help them get their goods to the market? So when you put all of this together, so I'm talking about the banking community, for instance. I come from the banking community, so I understand that the kind of incentive you need to give in terms of interest rates that would promote their business to thrive, that's very important. If you're talking about the fiscal authorities, in terms of tax holidays, what kind of tax holidays are you giving them? And in terms of infrastructure facilities, do you have the road or transportation networks and logistics that would help them get their goods to the market? Then you talk about the 4th key anchor, which is a non-oil, terminal. If you go to the port today, you would understand that it's very difficult for any export, producing company, okay, to do business because there's a lot of challenges at the port. So if you create a terminal that is solely dedicated to non-oil commodities, you begin to see traction in that area. You see people are encouraged to go into the production of non-oil commodities. Right now, commodity prices are, at their highest level all time, but we are not benefiting from it. Why? Because we are not scaling our business. We are not even getting them to the market. We are not competitive enough. So, for instance, when we're not enjoying oil, you're not even enjoying non-oil as well. And this country is actually blessed with not just oil, but with non-oil commodities. So, Nero, if you understand that, when we say the stakeholders, it is not just limited only to the central bank. But the bankers as well, they have a role to play. Fiscal authorities, they have a role to play. And we must all come together to ensure that those evil machineries that would make sure that this initiative doesn't work, we must fight against them. Because the moment you go or combat this, you are taking some people out of the business.
Okay. All right. Well, you've suggested a lot of solutions, but for you, which one do you think, can be implemented? I mean, when you look at the economy and what's going on at this time and the election coming up, and of course, that impact that it has in the FX space also, you've talked about creating one window, finding a balance. albeit with the possible consequences. You've talked about the RT20, you've talked about cocoa. Which one do you think, if the government focuses at this time, would feel at least a major degree of impact?
So you have between short, medium, and long-term plan for all of this, okay? I think that if you ask me, the first thing that central bank has to do is to restore confidence in the naira, because that has been eroded completely. So you have backlogs not only in aviation, you have backlogs in foreign portfolio inflows, those that are waiting to repatriate their funds. I think that the central bank has to bring all of those backlogs down to a significant level. That's, I think, it's a low-hanging fruit that they need to quickly combat. All right. Then you also need to begin to look at how to strengthen the supply channel. So strengthening the supply channel means that in one of the 5 key anchors that I mentioned, the first one is value addition export facility. They must implement that immediately. Okay. All right, Mr. Tosin Oshikoya, the Chief Executive Officer of Commercial Partners Asset Management. Thank you so much for your suggestions. And we do hope that the authorities would implement at least the low-hanging fruits you've suggested, and then we would see the impact. Thank you so much, and enjoy your weekend. You too. We'll take a break now. When we come back, we head to the market. Do stay with us. This is still Business Morning on Channel 7.